This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny. Today on the download, markets are a frightening thing right now, and a lot of cracks starting to form in some of the more watched places, such as cryptocurrency, and we'll certainly get into that. But right now, Morgan Stanley, in large financial news, has been ordered to pay a $30 million fine for misleading robo-advisor clients. This is the largest fine levied towards robo-advising services. Essentially, for those that are not familiar, the most traditional form of financial advisory is when you have a person that you can call and they give you advice based on your specific financial goals and income and all sorts of things, but you're dealing with a person directly. With robo-advising, essentially, it is kind of what it sounds like. You are using some type of automated artificially intelligent or machine learning platform to plug in all of the metrics on what you are looking to accomplish with regard to risk tolerance and income and goals and things like that. And it will kind of build a scenario for you and an investing strategy that will hopefully accomplish your goals. Now, these platforms, again, are very kind of new in the market, and some of the claims being made by people can be a touch exorbitant. And unfortunately, Morgan Stanley was deemed to have been kind of misleading people on the actual returns that they could expect, and a lot of other things with the context of just how successful you can be with robo-advising. So although it is, never necessarily good to see people getting financially harmed or companies doing things that are, outside, let's just say, the scope of acting in their client's best interest, it is good to see that the government is taking a harder stance on making sure that these things are a slightly bit more regulated marketplace and helping to protect retail investors in the end. Because the last thing that we need, especially in this current climate with us inching closer to a bear market and possible recession, is to have people putting their faith into a system or program that could ultimately financially harm them. Now, the credit rating bureau Standard & Poor's has issued a press release claiming that we are officially in a bear market. This isn't necessarily great news for anyone, but I don't think it was necessarily unexpected news for anyone to hear. Stocks have slid almost 20% from their COVID-19 highs a year and a half ago. So while this isn't something that is altogether unexpected, it's not necessarily ever good to kind of hear it put out by a large respected credit rating agency such as Standard & Poor's. Now, Standard & Poor's does also put out the S&P 500 index. So, if they're kind of ones to have a good finger on the pulse of what is actually happening in the markets, and seeing this will possibly have farther ramifications in the markets, seeing if just, them saying it will have a direct effect on share prices of other companies possibly listed on their indexes. So it's something that investor sentiment is starting to wane considerably in this market, and having large credit rating agencies come out and kind of maybe chip away at the perspective of potential investors is not necessarily the best thing to hear. Coming on top of news that is being reported right now, the Fed is expected to raise lending rates by almost 0.75% on Wednesday. Now, this is a very large and considerable raise, considering they've already raised rates once this year. Now, the 30-year fixed rate home buying mortgage is sitting around 5 to 5.5% right now. And to see what this is actually going to raise rates to will be very interesting to see if it has a larger effect of starting to cool down some of the inflationary metrics that we've been seeing. The consumer pricing index still soaring. We're seeing cost of goods rising by almost 40% in some different key metrics such as food and energy and a lot of other things. So seeing if this will have the effect to cool some of those inflationary measures will be interesting to watch, but it's also going to make things considerably more expensive for certain markets as well, such as borrowing money. Now, of course, the prices of homes with the free money essentially that was being put out in the marketplace over the past, almost 10 years has obviously had the effect of very heavily inflating real estate values, and to see if this will have the effect of cooling that off some. But with how much prices have risen, even a considerable drop will still keep prices of things like housing at a considerably higher rate than they were over the past several years. So while this may be a step in the right direction, it is still very early to see, and just how far down, it's still very early to tell if this will have much of an effect or what effect it might have in general, besides just making borrowing more expensive. Bitcoin has fallen below $21,000 per coin when it was over $60,000 or plus of value over the past 12 months. This is just an absolute wild ride on the cryptocurrency markets. Trading of Ethereum was down almost 20% over the weekend, and we have Bitcoin falling again to its lowest price in almost 4 years currently right now. So cryptocurrency markets are getting absolutely hammered. This also does come on the news that the cryptocurrency lending platform Celsius has frozen all of their withdrawals and outflows. And all of their withdrawals and swaps. Now, it's important to kind of understand, if you aren't familiar with what Celsius is. Celsius was maybe kind of the dark horse coming in to try to shake up things with regard to traditional banking. They kind of billed themselves as the quote anti-bank. Now, essentially how they operated was mainly in the same vein and similar context to what a traditional bank would be, whereas you deposited cryptocurrency instead of cash. So you would take your cryptocurrency, deposit it into a Celsius account, and the same kind of basic principle would operate, where they would take in the cryptocurrency deposits, they would lend those cryptocurrencies out and then give you some type of return on your deposits. Now, traditionally in a bank, if you deposit money, there are certain liquidity requirements that are required to be held, meaning that the bank can't take in $100,000 and then turn right back around and lend $100,000 if that's all they have in their deposits. Now, unfortunately, with someone like Celsius, they weren't regulated under traditional federal banking regulations. So the oversight on how much of their underlying, call it deposits, was not regulated, and they have been seeming to get in trouble with regard to their liquidity on the ability to pay back depositors. Now, over the course of January to March, they stated that they had over $1 billion of outflows and had no problem meeting those obligations of depositor withdrawals. However, over the weekend, with the precipitous drop of cryptocurrency values, we saw them issue a press release stating that they are freezing anyone wishing to withdraw funds, essentially cryptocurrency, from their accounts. This would be the same thing as we saw in the Great Depression in the 1930s, where people went to the bank and there was no money to be withdrawn. Now, again, this is specific just to a cryptocurrency lending platform, but it is very frightening considering how much money, or I should say how many assets that Celsius held. As of the last report, they had $24 billion worth of cryptocurrency deposits held on their books. Now, obviously, this number can fluctuate wildly depending on the actual value of the cryptocurrency, but it is very frightening to see such a large institution such as Celsius basically saying they can't meet their depositor obligations for people looking to withdraw their assets from the platform. So this will be very interesting to watch over the next coming days and weeks. Also, this coming kind of on the heels of the government, the House and Senate, putting through cryptocurrency market regulation legislation that hopefully will try to curb some of these things, because we're seeing things like Celsius having to freeze depositor withdrawals. We're seeing the complete crash of Luna Terra cryptocurrency, which was the 9th largest coin on the exchange markets just a little bit over a month ago, with seeing billions of dollars wiped off that market capitalization. And over the past 3 months, we've seen over $1.5 trillion of market capitalization and value wiped out of the cryptocurrency markets. This is kind of just a unprecedented amount of value being lost in a specific market, while granted, it's not necessarily something that is as directly correlated and affecting the general population of the United States, this will have further reaching consequences, as we've seen with the company MicroStrategies. Now, to give a little bit of backstory on MicroStrategies, they are a cloud-based computing and service provider that operates, a lot of different things. People may be familiar with things like CRM platforms like Salesforce. They operate in the space of offering support and service and cloud-based computing strategies for people. They're not necessarily a cryptocurrency company, but they're a company that obviously employs people. People use their products and services. They do cloud-based computing and a lot of other things. So, just keep in mind that they are not a cryptocurrency company. However, their management decided to basically, instead of having cash reserves, place their faith into cryptocurrency and specifically Bitcoin. Now, when doing this, just like most businesses, they carry some sort of debt and have creditors that they use for liquidity. They're not necessarily paying vendors and things like that in cryptocurrency. But the issue is that the underlying liquidity requirements that their lenders had, being based on the cryptocurrency value, is putting them dangerously close to a margin call where they will have to increase their liquidity by almost 60% in order not to have calls placed on the actual underlying debt that they have taken out. So you can see how, with cryptocurrency being something that can fluctuate as widely in value as it has been over the past several months, companies that have adopted cryptocurrency into their balance sheets at a high degree, such as MicroStrategy, can face huge issues if the price fluctuations happen to the degree that they have been. So while cryptocurrency, and at least, for some investors, might kind of be just a distant kind of gambit that other investors are making, but they're not necessarily invested in it personally, this stuff is making its way into mainstream operations of more traditional brick and mortar and service-based providers. So if cryptocurrency markets do crash, this can have a significant ripple effect because of just how much money is invested and how much people are investing their operational livelihoods onto this new type of asset class. So it's just something to keep in mind, that although cryptocurrency, if you're not invested in it, you may just kind of put it on the back burner and say, hey, that doesn't affect me. It certainly can. And it's being very, very evidently illustrated with things like the cryptocurrency lending platform Celsius and also MicroStrategy. And lastly, on the cryptocurrency news, Coinbase stock officially been downgraded by JP Morgan analysts that it has continued a almost 15-week slide on share price. So not necessarily unexpected, as cryptocurrency markets have been in a wild flux over the past several months. But, it is unfortunate for those investors that purchased Coinbase stock on the open exchanges in the U.S. securities markets. And lastly, crude oil, what everyone loves to hear about, especially with the summer travel plans getting more expensive by the day. The national average reaching almost $5 per gallon. And as of people listening to this, it might have also surpassed that, which is kind of surprising considering productions have kind of risen to meet demand. But crude oil this morning is trading up 1.18% on this week, which might also increase the pain of the pump. But if you're looking for other market segments to possibly invest in, energy might be a good play right now. But ultimately, it will be something to kind of wait and see on, as we are, potentially entering into a bear market, which might also have larger implications for the economy as a whole. We shall see where everything goes. Unfortunately, this was a slightly more melancholy download, but I hope everyone got some good information. If you didn't already know what was going on, thanks for joining. Today on the what is a margin call? I felt it was important to explain this in the context of the issues happening with the cloud-based computing provider MicroStrategies and the download. So it's good to understand, what is a margin call? A margin call occurs when a value of an investor's margin account falls below the broker's required amount. An investor's margin account contains securities bought with borrowed money, typically a combination of the investor's own money and money borrowed from an investor's broker. A margin call refers specifically to a broker's demand that an investor deposit additional money or securities into an account that is brought up to a minimum value, known as the maintenance margin. A margin call is usually an indicator that one or more of the securities held in the margin account has decreased in value. When a margin call occurs, the investor must choose to either deposit additional funds or marginable securities into the account or sell some of the assets held in their account. This has been the What Is. Hi, everyone, and welcome to another edition of the Alternative Investing Advantage podcast. Today, we are pleased to welcome Miriam McKisic today. She's with the Multifamily Ninja.com, a very interesting story and a very good guest. I'm excited to have her on today. Thanks for joining us, Miriam.
Thanks for having me.
Absolutely. So I think I probably couldn't do the introduction and the bio of you any justice. So I'll let you go forth and tell people a little bit about yourself, because you have a very interesting backstory. Is pretty much the main reason why I wanted to have you on today, and also to talk about kind of your journey into multifamily. So I'll let you take it off from there.
Sure. Well, I'm a local native to Tampa Bay, Florida. I'm born and raised here, specifically Clearwater, and then went to Dunedin for a stint. And I just love this state. I am currently working as a full-time operations engineer for a telehealth company that specializes in sleep. But the real estate bug bit me back in the summer of 2020. It was kind of just through a series of events. I mean, I wasn't explicitly looking for anything in particular outside of the fact that I just knew I wanted to grow wealth a better way. I thought I was going to climb the corporate ladder, and that was going to be my definition of success. And then I just kind of had a moment. I was like, wait, I don't know if I want to do that, because like most of us, time gets really important as we get older. For whatever reason, that maturity level just kicks in. You're like, wait a minute, I value time sometimes over money. I value time over money. I value time over stress. I value time, over you name it. And so it just set me off on this journey. So I actually found a wealth mentor. His name's actually Jim Baker. His company is called Wealth with God, and it was just really incredible. And he described to me about 3 paths to wealth, and one of those was real estate. One of them was owning a business, and then the third is what we all know very well, which is retirement funds through a corporate or W-2 position. And after learning about all the 3 avenues and learning that real estate makes the most millionaires, and not to mention, it just, out of all the options, it just jived with me. I was like, I actually really love real estate. It's fascinating. It seems like anyone can do it. You can put your mind to it, type of thing, and just takes some good old hard work and effort, and you'll see some fruits of your labor. So long story short, I then went on to find a real estate coach, started in single family, and someone in that group actually recommended a book on multifamily, just because you're in an exploration phase. You're like, there's obviously a lot of avenues in real estate to choose from. And so I picked up that book. It actually happened to be Michael Blank's book. I think it's got some really generic name, like Success Through Real Estate Investing. Like, it's got a really generic title. However, it's all about apartments and all about multifamily. I ate that book up. I read it really quickly. I'm not a book reader, so that says something. And I was like, I am never looking back. This is the avenue in real estate I want to pursue. So here I am, and I've had quite the journey. I not only do it passively, I invest passively, but I also am doing it actively now, and I love having both. I know that sometimes people end up choosing a lane to play in, and maybe I will eventually, but as I'm just kind of kicking off my journey here and experiencing both sides, I enjoy doing both. So that's me in a nutshell. Hopefully that answers your question.
Yeah, fantastic. And I also, have to bring it up. You, outside of this, you also competed in American Ninja Warrior. Is that correct?
I did. And I still train weekly in that sport. I love Ninja Warrior, and I did get blessed with the opportunity to compete on this show. So that
is awesome. I mean, I can count on one hand how many people I've met that have actually done it. So it's always cool to meet new people that do new and interesting things all the time. And especially when it comes to anything you have success in. Obviously, we focus on real estate and investing, but any personal achievements of our guests, we always like to highlight. So that's pretty cool. I think it's definitely something that, should be mentioned. It's a big accomplishment. So you talk about kind of, you back in 2020, I guess you said you got bit by a bug in 2020. Better bug to be bitten by real estate instead of the beginning of COVID. I guess that would probably be a good thing to have happen. So, you start out, you're in the W-2 world. You're working for, I believe it's what industry is it? Pharmaceuticals or?
It's actually it's healthcare. It's a telehealth company. So we provide sleep medicine.
Okay. So you're working in the healthcare field in telehealth, and then you decide to make the transition, or you at least get the, urge to actually, maybe do a little bit of a pivot. Now, you told me now that you have 10 units that you've invested in so far. What is the kind of pathway from going, okay, I'm, punching a clock, I'm doing my W-2 to getting involved in that first deal? You said, you had a few mentors, read a few books, which are all great. And I recommend anyone looking to get involved, I should say invested and involved, first off, read all you want, but talk to people that actually do it. It is a very get in what you put in type of business, but unless you know where to put in that effort and actually kind of, hone it in on the right thing, you're probably not going to make the results that you'd like to. So, from that pathway, you found a mentor, you got some good education, when you decide to take your first step, because you can read and you can get educated all you want, but what did it kind of look like to take that first step? What were some of the things that, maybe you were nervous about that, found out that weren't as big a deal, and maybe some things that, were a lot more time intensive or, more of a big deal that you didn't anticipate that ended up, coming to fruition?
Right. So you hit on a lot of good points there. You can, they call it paralysis by analysis a little bit. It's the same thing happens with educating yourself, especially in something that is new. And with real estate, let's face it, it is a pretty fascinating subject. I mean, I listen to podcasts every day on the subject because it's just inspirational to hear people's stories. It's you learn something new every time you listen to someone's story. I don't care if it's a seasoned, a new beginner, or what. So I guess I will agree with you completely that the educational phase only lasts so long. And then you've got to come to face yourself and say, okay, what do I need to actually be doing? I need to put this knowledge to work? I need to put one step in front of the other. And another book that I've read that really helped me is it's the concept of taking one step at a time, or just doing the next thing. Like, even if it's tiny, it's one extra step, one extra movement, or even if it's the tiniest of movements, just don't stall. I will say that the single most, I guess, impactful factor that changed the direction for me is networking. And I know that it's actually interesting because I find myself convincing people more than not that networking is really powerful and not a waste of time. And I understand that some people are wired a little differently, especially if you're an introvert. Networking's not going to be exactly life-giving for you. But at the same time, you just have to find ways to meet people doing the work, like you just said. And that was what I focused my attention on actually to get started. Because let's face it, I'll back up a little bit. I actually attempted to start calling brokers myself as a newbie, trying to fake it. I got the scripts out. I was like, this is what the script says to say. I'm going to be fine. And let me tell you, it didn't go so well. I think mainly because I can't play poker and I'm not a good liar. Not that you lie on scripts, but I just obviously had not done a deal before, and it must have come through my voice. And this broker kind of just weeded me out. Like, just kind of was asking me some really interesting questions, really, honestly, way too in depth for a first call, but he clearly was trying to catch me, and he did. And I kind of choked a little bit, and I was like, I just want to underwrite this deal to, give it to my partners and see what we learned about the deal. And I left that conversation feeling really defeated. I was like, wow, I just took a huge action step, but yet it failed miserably, And honestly, it scared me away from contacting brokers for a really long time because, experience dictates reality. And I was like, well, clearly I am not ready for this. But I didn't give up, even though it set me back. And I did feel like I slowed down a little, right? But I kept learning. I kept eating content. I kept trying to meet people, and then really focus my attention on local networking, because we're in a time and age where you can meet anyone anywhere virtually, which is incredible. But I was kind of finding myself getting a little distracted with just meeting people in Texas, meeting people in California, meeting people who invest in Atlanta, and for whatever reason, I was thought I was doing good networking, but then realizing, wait, I want to buy in Florida. I want to focus. I live here. I love here. I want to buy assets here. That means I need to meet people here. So that's where I really shifted and just started networking with people who are doing the business. I kind of, you kind of find people online, you ask around. I'm a big Instagrammer. I was starting to follow people who I knew did deals in Florida, and just commenting on their content. I was, making sure I was engaging. And I actually heard that tip from another person where, like, you don't necessarily just pick up the phone and say, hey, I want to learn from you. Like, I'm Joe Schmo from the street. Like, sometimes with our, virtual environment, it's really powerful just to start engaging with someone or a company that you really admire locally, and just get them to know you through that lens. And then finally, it'll kind of come naturally. Like, sometimes a private message will start up and you can share a little bit of your story, and then you'll be really surprised and pleasantly surprised to know that a lot of people are willing to help, especially in the real estate. One of the things I love about this industry is that they're really good people. And I've had a really great experience so far. So that was a long-winded answer to your question.
No, yeah, absolutely. And it brings up some really good points, because a thing that attracts, I think, a lot of people to real estate is that it's accessibility to everyone. To be a doctor, you got to go to school for 8 years. And there's kind of a lot of, pretentiousness that kind of comes in some of these highly academic areas where people are like, oh, well, you didn't do X, Y, and Z. Whereas with real estate, it's accessible to so many people. You don't have, they're really, you don't go to college to get a degree in selling real estate. Now, as far as I know, I don't think anyone offers that kind of degree path. So it's such a kind of one of the last truly wealth building industries that, anyone can get into. You don't have to know how to, you don't have to know how to code and compute. You have to know how to talk to people and, get out there and, basically everyone knows how to talk to people to some extent. And, whether you do that from the lens of, behind a computer with engaging with people, which helps, people maybe a little bit more introverted that feel more comfortable with that, or getting out and going out to a networking event or going to a real estate conference. And the nice thing is that, these things are very low impact from the financial aspect of it. It doesn't cost you a whole lot to have an internet connection to get on there and engage with someone online. A lot of real estate conferences, so long as you're not kind of going to like a guru master course kind of thing, we're going to be a couple hundred, but maybe spend $1,000 in hotel travel and everything. And if you compare that to the amount of education and opportunities that it offers you compared to going to college or something, it's the accessibility that I really find very, very engaging from the aspect of real estate. My family's been involved in real estate for a long time. I get involved in a lot with the investment side of things through IRAs and how we work. And it's great to hear, those same kind of stories of just how accessible this is to people. And I think especially in the context of multifamily, that's important for people to understand. It's really easy, basically everyone lives in some type of, housing. A lot of people live in, apartments, and they say, oh, it'd be so crazy and hard to buy this. They see single family real estate as kind of the only avenue to really get into. It's like, oh, well, hedge funds and all these other crazy people own these because they're very expensive and they're very big. And they just don't understand, the accessibility. Yes, you're not going to go out and buy 10 apartments in a year, as you might be able to get, 10 houses done in a year. And if you're doing that, that's still really good. But it's the scalability of this. Maybe you only get 1 or 2 deals a year, if that. But if you did that, then maybe you got 50 doors, as opposed to, you're not going to do 50 doors in a year on your first year, but you might get 1 deal in the first year doing multifamily. And understanding that there is an accessible route to do that, I think is very important for people, and why it's so important for people to hear stories like what you have of exactly how you did that, coming in and starting in and getting involved in multifamily while not having this crazy long tenure in real estate. It's easy, again, to see someone's like, oh, this guy's been investing in real estate for 60 years. He's, now he's invested in multifamily. He's built up this bankroll. Doesn't have to be that way. So, again, that's kind of, a little bit of a long-winded, rebuttal to what you just said. But I think, again, it's important for what I want people to understand and take away from this. I like people to get something good out of their 30, 40 minutes that they listen to this. And I think that's, again, a good point that several people that have been on here have brought up, is that it's very scalable. You get a lot more bang for your buck when doing multifamily real estate, and you don't have to have some type of huge, crazy bankroll or very, very extreme, track record to do it. So let's kind of go into, you talked about kind of how, you got engaged to the first part and kind of, what a few of the stumbling blocks were. When you found that first deal, what did it look like? And maybe talk through some of the steps, obviously not getting in, to, extreme detail and everything, but, kind of what are a few of the things that, when you found it, what are some of the first steps that you took and kind of how did it end up coming together?
Okay, that's a great question. And I love telling the story because this was, a really pivotal deal for me. So it actually came to me, my partners on this deal. I do not own this outright because like most things in multifamily, unless you have the huge bankroll, which exists, some people do, right? They just roll in with the dough and can buy out a building by themselves, but that's not the majority. It's not me. So through my networking experience, and through the groups and the conferences I attended, I actually met my now partners who are on this deal with me in Florida. And they happen to also be in Florida. And so I was really focusing on those relationships with people who live in my area. And we just really grew trust. I grew friendship with these people. I even go to accountability groups with a couple of them. And lo and behold, a couple of the people I'd known were deal searching in Bradenton. And one of them found the deal through a real estate agent who also sells single family. But this, real estate agents can actually see a lot. So through the grapevine, this real estate agent said, hey, there's this 9-unit in Bradenton, the seller, it's off market right now. He wants to get rid of it because he's transitioning out. He doesn't want to deal with it anymore. And, one thing led to another. And one of my partners jumped on it and said, well, let's look at it. And we got this deal for a slam and dunk price because the owner was incentivized to sell it. And, we were brought into the table and I think speed of course, in a hot market, the faster you work, the higher your probability of getting noticed on a deal. And so my partner just did a really good job following up and making sure we were really let it be known that we were really interested. So I was brought in after the deal was sourced to help raise capital because I'm a lover of networking. I have a lot of connections and I pride myself on that. And what some of your listeners might have heard in previous interviews too, it always takes a team to take down deals. Like you just really shouldn't do it alone. Can you? Maybe. Do you want to? Probably not, because it's just a ton of work and there's no reason to to play a part on a team that you either dread or are not good at. You have to leverage other people. There's a book called Who Not How, and I just absolutely love it. It's about who you know, not what you know. And yes, you need to play a part, but I have discovered that I'm a connector of people and, a solution finder. I love doing those two things, and it really brings about a lot of success. And so I played that part. I helped bring the passive investor to take the deal down. And I also invested part of my own money in capital so that I could have some GP stake in the deal as well. I mean, I would have been given it anyway to raise capital, but I was able to, help out in that fashion. So it's been really fun. And that's kind of how that deal came to be.
Yeah, there's two things that you brought up in there that I really want to touch on. First, and I say this to a lot of people, quit hating on residential realtors. They get a lot of grief, and they can be one of the most powerful tools, no matter if you're doing single family investing or multifamily investing, because the kind of the low hanging fruit for anyone wanting to sell real estate is calling a realtor. And if you know them and you're in good with the people that are in your local area, they hear things. They sold a house for someone, and then the conversation with the seller, they were like, oh yeah, my uncle's also invested in real estate. He's retiring and looking to get rid of this apartment building. They're residential, but they know you're in. It's just these people are the ones that hear everything. And
absolutely
be friends with residential realtors, and it will be one of the things that can pay huge dividends, even if you're not selling stuff through them or buying stuff through them. Give the residential realtor some love. They can be a huge asset to people because, again, they're kind of the first gatekeepers of people looking to do anything with real estate. They typically call a realtor. So get to know them, use them, love them. They can make you a lot of money. Secondly, was an interesting point that I don't think anyone's ever really brought up before, but it makes a ton of sense, is playing to your strengths, know what you're good at in the particular deal. There's a lot of different parts of a deal. The main ones are, one, sourcing the deal, two, raising capital for it, due diligence, all these different kinds of things go into it. And, I'd say there are probably 5 core tenets. Those are about 3 of them, but understanding what part you're good at to know where you can bring the most value. If you try to wear too many hats, it's not going to work. So if you identify that, and like you said, you know how to network extremely well, you're extremely outgoing, and you know how to kind of get people interested in something and obviously raise capital, you identified that with yourself, and that has worked very well for you. If someone else, if you're coming into this and you go, hey, I'm a little bit more introverted, maybe raising capital isn't good, but I know how to read, financial statements, and I can really go through a deal stack to make sure that there's no, hidden time bombs in this thing that we're missing. That's, play to your strength. Bring that to the table. Don't say, hey, I'm the jack of all trades, because, what is it? Jack of all trades, but a master of none.
That's right.
Try to understand and play to your strength, just like with anything in life. It's a great thing to kind of bring up, and it's not something I think anyone's really ever kind of uniquely identified before, or really kind of brought it to a point. So again, great point that you make with that. So, you've done your first deal, and I think actually here's the third point of what you said that I think is good to take away from that is, make it be known. The biggest thing in real estate, and I've said this about residential real estate as well, is the worst thing you can do in real estate is not tell anyone you're being involved in real estate. This stuff is, it may sound corny, but say it loud, say it proud, shout it from your rooftop, because that's how this stuff works. There's a reason you see billboards for real estate, is because the more visible you are in the industry, typically the better you do, because people will gravitate, and just for whatever reason it works. So telling people and making it known that, hey, we did a deal, it went well, what else is out there, has seemed to play well for you, because you said this was 2020, you've now done 10 deals. Any way you slice that, that's a good clip, even for residential real estate, not to mention multifamily real estate. So I think that's really awesome. So from there, how did things kind of, go from there? What was, kind of the next steps in that? Because, you did your first deal, you wiped your forehead, you say, okay, this is great. But what do you do from there? You got to keep going. One deal is not going to sustain you for a lifetime and generate that wealth that you talked about. So, you kind of learned a few things from the first one. You identified what you were good at. What did you take away, and how did you kind of improve on that initial success with finding that deal?
Yeah, no. So right now, I will be on the constant hunt for deals. And really what it is, like right now, what I struggle with in my current position is, unless you've got deep pockets and or a substantial portfolio already to impress a broker, they don't really need the newbie. They really don't, because they have institutional players in their back pocket who get all first picks on the good deals, right? And listen, I love brokers. I love working with them, and they have to make a living too. So I understand the focus where they want to go to who they know is going to close fast, on time, and smoothly, right? So while I'm trying to drum up my rapport and my trust with brokers, I'm just staying in contact with the ones that will converse with me. I actually text with one local broker in Tampa here often, just checking in, saying hello, how's it going? I know that he's constantly on the hunt for local deals, and he kind of plays in that smaller unit size space where I really like right now. The mom and pops, anywhere from 5 to 50. I know that's kind of a range, but that's like the sweet spot for mom and pop owners. There's still a lot out there. And so that's where I've kind of asked him to focus. If you have anything within that range, we just took down a 9 unit in Bradenton, let me know. And so that's been going really well. And I check in every once in a while, and usually he'll have something for me. Hey, I actually have another 11 unit down the street from the one you just bought. You might be interested in looking at it. So that's been kind of happening, which is exciting. And again, what you said, I am constantly doing, which is letting everyone know that I do real estate, that I'm a fanatic about it. Multifamily is the name of the game. One of the things that I've been really focusing on now is actually leading a local meetup, which has really changed the game for me when it comes to exposure. Clearly, like, you run a meetup, you're going to put yourself out there. I co-lead it with a few guys who are also local and doing multifamily deals here in the state. And it's just going off to a really great start. We are maxing out registration every month. 50-ish people are showing up, and it's in the heart of Ybor. So soft plug, but anyone listening who's local, by all means, get in contact with me and get on our mailing list. You're more than welcome to come. But that has really also changed the game. Every month we meet, we're learning new things from each other. I'm getting some great advice on how to, just because I took down a deal with some partners doesn't mean that's it. Like, now we got to make the deal happen. We have to stick to our plan, stick to our pro forma, and make sure this thing goes wildly successful. So, it's I think the saying is the real work starts when you actually close. Yeah. As hard as bringing a deal to close can be sometimes, like, that's only the beginning. Like, you really, asset management is super important and something that I know I need partnership on. So that's what I'm doing. So yeah, that's kind of what's going on in my world in the immediate, in the immediate time right now.
Yeah, absolutely. That's awesome. So let's maybe take a step back. So, and we'll certainly provide the information, because I believe, at Advanta, we are strong believers in the rising tides raising all ships. We're always happy to promote investment meetups and everything. So thanks for letting everyone know about that. Now, to the point of kind of going back to playing to your strengths, what are some of the things that you do? You have identified that you're good at going out and drumming up support for a deal and finding people and raising capital. What are some things that, if someone else feels like that's their niche, are some maybe kind of good pointers to guide people on saying, hey, if you're the extrovert of the group and you know that you can really network well and do this, obviously, I can go into a room, and obviously I'm kind of a bad example, but there's plenty of people. My wife, for example, she can go in the room and make friends with every single person in there, but she doesn't probably know the first thing about raising capital for a multifamily real estate deal. Not for anything, she's just not exposed to it. So, if someone's coming in that's green with it, but they understand their strength, what are some good tips for people to understand about, doing that in general? Let's kind of maybe keep it 30,000 foot view, very high level, but good pointers for people.
Well, first of all, going back to education, you never want to stop learning. So there are actually some fantastic books out there on capital raising in particular, and there is an art to it. I mean, anyone listening who's in sales will know that sales is an art. Some people have a real natural knack for it, and capital raising is really no different. In fact, people who are in sales positions tend to do really well in the capital raising space. Really what it is, again, it's building credibility with the people you talk with. I think one of the most, I would say, impactful ways you can influence people is just broadcasting and sharing education about what real estate is and why it's a great avenue to invest in. How is it an alternate vehicle to stocks? How is it an alternate vehicle to a traditional 401k? What happens when you self-direct your funds? How did you even know you could do that? It's pretty amazing, actually, to me, how many people do not know that you can self-direct your retirement funds from a previous employer and put them in assets like real estate passively. It's really powerful. And just sharing the knowledge and expanding people's options. So, and obviously social media does that. I guess my whole point is using social media as a platform to really broadcast that, and not being afraid to just, you can even repurpose someone else. Don't reinvent the wheel. There's plenty of great content out there. But even like taking a blog that you really enjoyed reading and spinning it and putting it in your own words and, making it your own. Those are some low hanging fruit, I think, that really helps people and gets you noticed and trusted. Because what's happening now is, because I'm talking about it, I try to talk about it weekly, if not daily, through my Instagram and story sharing and all that. What starts to happen is people will be like, tell me more about that. Like, what are you actually doing? This is really interesting. And how can I learn more? Or that's for the beginners who need to just learn. But, when you start raising capital, people are going to think of you first. If you're the one who's constantly in their faces, either in person or virtually, they're going to think of Miriam. They're going to think of you when they're ready to kind of take a leap. So it's exposure, exposure, exposure. And do not be afraid. Like, it's never a wasted effort, I think, to put yourself out there and talk about it.
Yeah, that's a really interesting point. I think you're probably the first person to bring up the use of social media heavily. Obviously, everyone markets on social media now. Even, the more traditional of everything is on social media. You're kind of the first one to bring it up as a point of an actual tool to use to drum up support and exposure. I think a lot of people are, at least with real estate, kind of, you start Google searching stuff and you see, okay, real estate meetups, RIAs, which are all fantastic. I encourage, if you want to get to know people, go to your local RIA. There's a ton of them out there. They're not all created equal. Just because, you don't jive with one doesn't mean there's one that is going to work very well for you and is very good. Try them all out. You'll find something that works for you. Try a bunch of meetups. These are, cheap and easy ways to get exposure and to meet the people that are actually doing the deals. But when it comes to social media, it's really something that, from my professional experience, social media is me liking pictures of race cars and, bicyclists and triathletes and, my just general interest. That's pretty much what I do, is I sit as a little troll on Instagram and hit like. So besides that, if someone wants to use social media more effectively, because I poked around what you sent me, and your social media looks fantastic. Mine's got a few pictures of my Jeep I'm restoring and other crap on it, but like, how do you what are some kind of general good guideline principles to say, if you want to be invested in real estate, you said like sharing blogs or putting things on stories, what are some good tips for people if, that's a very easy and cheap way, past just your cell phone bill and a free Instagram account or a Twitter or something? What are some good ways to kind of create some engagement? Obviously, liking people, following people, commenting, but I'm probably missing a bunch there. What are some good pointers for people?
Yeah, well, first of all, you find people who are doing what you want to do online, especially when it comes to real estate. Like I said, I really seek out those people who are doing things on real estate, sharing really interesting articles, especially when it comes to locally, like anything that has to do with Tampa real estate. I follow all of the news outlets that are really homegrown here, who are following the new developments, who are following the economic growth, the job growth of the cities and things like that. And honestly, resharing. Instagram has this really cool feature in a story where you can link now to your stories, and you just make it really easy for people to follow you and follow the content that you're sharing. When it comes to actually building the content on your page, I might be a little against the grain on this, and I'm no professional. Don't get me, please. There are people who actually coach on this, but my experience has told me that people are people first and foremost. We connect with each other. And real estate, for whatever reason, it's actually very rare to find people who humanize the process. It's kind of like typically when you think of multifamily or commercial real estate, it's the guys and girls in suits and ties, and especially mainly men. I mean, I'm not trying to be sexist here, but men are the majority who you kind of see on the covers of commercial real estate content. And so I just take as much as I can and just be myself. So we talked about the fact that I'm a ninja warrior. I mean, a lot of my content is around my ninja warrior activities. I share videos and pictures of me doing the sport. And real estate, honestly, is something that I'm kind of trickling in very slowly but surely. I can't wait for this 9-unit deal we just took down. I plan on sharing before and afters and kind of walking the property and sharing that with people, because now I actually own an asset that I can do that with. And if I'm out and about and I'm helping another person locally with due diligence walks, or I try to share pictures that I just met this amazing broker today or this amazing operator, and you just this is what I'm up to. Your social media are little snapshots of your life. So why not? It doesn't have to be completely real estate focused. In fact, people are more attracted to you as a person and why you do and how you do what you do.
Yeah, I think that's really kind of goes in. It's like there's a reason that reality television is so popular. People are just curious about what other people are doing. And if you can leverage that inherent curiosity of human beings to say, okay, well, people are curious, let me show them what I'm doing. And again, going back to what I said originally, stand on your rooftop and scream that you invest in real estate. Might be annoying to a lot of people, but that one person that it's not, that finds it interesting, is going to pay off in dividends for you. So, again, I think that's really awesome that you again, try to humanize it and just, the process. People are always kind of curious about like, oh, well, what do I do here? Well, show them, put it on your Instagram, put it on, tweet about it. It's, people are interested, like, oh, well, I did this. What do I do now? I just, it's like, what does due diligence look like? Oh, hey, we're doing a walkthrough of the property. Here's some things that we found. That's hugely beneficial to people. I don't know what to do if someone were to say, walk through a multifamily and, do a due diligence walkthrough. I can look at a deal sheet. I know how to do financial statements. I can do that all day long. I'm pretty good at that kind of stuff. I don't know how to do that. I'd be interested, but where do I go? Certainly I can probably hunt through YouTube, but it's on my phone. I can flick through. A story takes, 30 seconds and boom, you've given that value to someone, and, the engagement and someone saying, oh, well, that person obviously then you start building credibility. Like you said, it's, the new people are going to come in, they're going to engage with you, but it also, again, helps to build, I think, credibility. If you're, you can't just walk through a place and say, oh, there's a broken light switch cover, we're going to ask for a 30% discount on this deal. It has to be something, it's like, hey, we walk through, all these, kind of things that, we're on our punch list. We're good. Here's a few things that were bad. Now it's time to go back and do some negotiating, whatever that might be. I think, again, good content for the wide range of people to build credibility and drum up interest in what you're doing, I think all people can agree, especially in real estate, it's going to be beneficial. So, some great points that you make there. Besides doing that, starting a meetup, I think, is also kind of a really interesting avenue that I think a lot of people maybe don't think about doing, but I don't understand why more people don't. Yeah, the market can be a bit saturated, but the people that go to networking that are in real estate, you'd be surprised at how many meetings these people will actually attend. Market saturation is not as big of a deal as you'd think. In my profession of doing business development for, our company, I see these same people at all of these things, and these people are doing tons of deals. This is how they make their living. It's like if a new one pops up, they're going to be like, okay, great, I'm going to go to it because, if it's great, good. And again, you got to put on something good. It can't just be, hey, here, put on this name badge and go talk to someone, make something engaging, create some value there, because these people that are doing it, they'll try it out, and if you're out there, people are looking for stuff to do, put it on Meetup. People, I literally just watched Field of Dreams last night. If you build it, they will come to an extent. I have to make it something engaging and interesting, and make sure that there's attendance. But for the most part, I don't understand why more people don't do that. At least for your meetup, let's talk about that for a second. What was kind of the impetus for you to start that? Was it just kind of morbid curiosity about starting one? Was there someone that, maybe advised you, hey, this is a good idea? And maybe what do y'all do specifically that's, different or engaging, or is it just kind of a general meetup? Sell your event a little bit. That's what we're here for.
Okay, awesome. Yeah, happy to. So the meetup, it was interesting. I kind of inherited it. So we're talking about real estate meetups, and we're in Tampa, Florida, for those listening. And one of the most popular meetups is the Tampa RIA, right? The Real Estate Investing Association. And so that is majority single family. Are there people who play in other asset classes? Yes. But the focus of all of those meetups and their sub meetups are mainly single family. You'd be surprised how little there is actually focused on just multifamily assets, anything 5+ units and above. So we're not the only meetup in town. There is one other meetup that is run. And so that's awesome. But took a pause in COVID. Obviously everything did. It was like, it took a long time for the meetups to drum up again in general. So what happened was, in the multifamily space, Dylan Marma is an amazing operator here in Florida. Now, he started up once things were opening back up, he started a multifamily meetup on his own. He kind of transplanted from Tennessee, and he wanted to build his network here in Florida because he had moved. And so I started going to his, and I found it just from searching on, I think it was Eventbrite. I was just searching multifamily meetups because I wanted a specific meetup in my asset class. I knew that Tampa Bay RIA was an option, but really wanted that multifamily focus. So just started being a real regular attendee to Dylan's meetup. And then he did it for, I think, 6 to 9 months. I can't remember exactly how long. And he started getting so busy because his business was really ramping up and couldn't lead it anymore. And instead of shutting it down, I raised my hand and I was like, I guess I'll take it over because I don't want it to stop. And I think one thing led to another. And I found I didn't do it by myself because I know better not to do this by myself. And I recruited, I got blessed, and I met Chris, Sean, and Troy, who now co-lead it with me. And we do it together. And it's been wildly successful. I think between me just being consistent on social media and telling people that we're doing this, making sure I'm marketing and giving people links to get on the mailing list so they can stay in touch, has really helped. But again, the demand for multifamily focused meetup was just there. It's just, there's not a lot going on there. So as far as making it engaging, we really try to switch it up. I agree with you that you don't want it just to be boring. In fact, especially a lot of people need a structure in the meeting to make it feel valuable. Networking is powerful and actually the main goal of our events, because especially in multifamily, everyone knows that you're only as good as your network. So we don't want to lose that aspect. But what we do is we sandwich our meetings with networking in the beginning and in the end. And in the middle, we put some content. And the content is what varies. We'll do a panel style interview. Someone will throw up a presentation and actually talk about their way they do business and what the assets they have and how they took them down. We're experimenting with structured networking, where we're going to have an organized hour of making, because there's freeform networking, which is just you talk to as many people as you want to. But if you're anything like me, I get really engrossed in conversations with people. And sometimes I don't get past 2 or 3 people for a 2-hour meetup because I was just really involved in meeting these 2 people, which is amazing. But you're like, there's 20 other people in the room that I never got to say hi to. So what we're doing actually, not this month, but in the July meeting, we're going to do some structured networking and really get some creative ways to make the room rotate. It's kind of like speed dating for networking, but getting people to talk and share what they're doing. So we have a whole bunch of ideas up our sleeves, like on how to make it interesting, but we definitely don't want it didactic. Also, we don't try to just, death by PowerPoint. We don't want to do that either. So again, the networking has been people have been a big fan of it. So we don't want to lose that aspect, but creating real structure and a cool environment to do so has been really working. So
yeah, I think that's a good point, is that, also if you're looking to get into, just on the point of starting or hosting a meetup, find what's not out there, especially, if there's tons of RIAs and there's no multifamily in your space. Again, that's in Tampa. I don't really know of many in Pinellas County. If you're someone in Pinellas County where I'm located in St. Pete, Clearwater, there's opportunity everywhere, because again, just because there's one in one city doesn't mean, there can't be one somewhere else. Like, you talked about Tampa RIA, just in, Pinellas County, you got things like Beach RIA that's out of Madeira Beach. You got like Larry Harbolt's meetup up in North St. Pete. You have Suncoast RIA over in Tampa. You have TB RIA, which has a million subgroups. You have Tampa RIA. You have the pro office that holds networking. Yeah, you got all sorts of different stuff out there. And these meetings all get 30, 40, 50, 60 people. There's tons of opportunity out there. So I think that's, just again, there's opportunity out there. Don't get discouraged if you want to do one thing. Don't let the fact that someone has more followers than you discourage you from trying social media and getting out there. Don't let the fact there's a bunch of meetings or a bunch of other people doing real estate, if you stick to it, you have an engagement, you have a plan, there is room for everyone to be successful in this industry. And that's, again, kind of going back to the accessibility of this. Yes, it's accessible to everyone, and it's accessible to the point where almost anyone can be successful in it if you put in the work and you don't just kind of phone it in. There is real estate out there. You're sitting on a piece of real estate right now if you're listening to this, unless you're in a car. We won't get into that. But there's so much of this out there, and it's so easy to kind of get into that. Just understand there's opportunity, and I think you have a really engaging story for the fact that especially coming from W-2, this wasn't your first trajectory and career choice. This was something that you pivoted in at this point of your life, and within 2 years have done well at it by sticking to a plan, being educated, and kind of following. Again, these are things that almost anyone in real estate is going to tell you. And yes, maybe some people kind of get sick of hearing it. It's like, oh, there's got to be some type of secret to it. It can be that easy. Or I should say it can be that simple. There's a big difference between simplicity and ease of use. It takes hard work to do this. The steps can be simple, but the engagement and the, production is what can be hard. You got to put in hard work to do it. So absolutely. I think that's really good. And that's why I love having people like you on here to show that the accessibility of this to people can be done. So with that said, we're kind of coming up on the 45-minute mark, how we like to cap these off. How can people get in touch with you? Go ahead, plug, your different social medias, what you have going on, your meetup and the like.
Yeah, sure thing. So you can reach me on Instagram. I think first and foremost will be the best outlet. My handle is multifamily_ninja. Or you can search by my name, Miriam McKisic, but you'll find me either way. That's my best spot. But I also have a personal website, multifamily-ninja.com. And then obviously I'm on LinkedIn. And then for the meetup, I think the best way is you can either search for us on Eventbrite. We're called Multifamily Meetup and More, Tampa Bay. So nothing crazy. If you search the keyword multifamily, we'll probably show up. And you'll see how to sign up for our events there. All the information is there as well. We also have a Facebook group by the same name, Multifamily Meetup and More. And that's kind of like the lowdown. And I'm looking forward to connecting.
Well, thank you very much, Miriam, for being on today. This has been another edition of the Alternative Investing Advantage podcast. Thanks for joining and have a great day.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.